From a technical perspective, our next guest does say that 20% of the S&P now above their 50-day moving averages brings the market one step closer to an entry point. Joining us this morning, Fairlead Strategies founder, managing partner Katie Stockton joins us. Katie, it's great to have you. All right, so walk me through what an entry point might mean in your view.
Well, a lot of corrective phases unfold in this ABC format with 3 waves. And we do think that we're in the 3rd wave, which is the final wave of that corrective phase. But what that would require, of course, is some kind of oversold entry point. And we're not convinced we have that quite yet. The short-term momentum is obviously very strong to the downside still. And we do have some minor signs of downside exhaustion, including that reading and market breadth that you cited. But they're not widespread enough to give us the confidence that we have a good entry at hand. We do think that there's a good possibility that that entry happens either this week or next week. What would really help that is a pullback in yields. The market doesn't like yields breaking out, and the 10-year yields have cleared very strong resistance at the 2022 high. And if that breakout confirms this week in our work, well, that's a pretty big deal. And I don't think that's going to be favorable for equities. And of course, if it fails to confirm, then that would be a positive.
I was going to say there were some last week who were pointing out maybe we get some exhaustion on TLT, but then we walk in this morning and we're back to 452. Can you talk about what a year-end target on the 10 might look like right now?
It really is, it kind of holds in the balance of whether this breakout confirms or not. That breakouts are often false, right? So if this proves to be a false breakout, or for treasuries or treasury bond benchmarks like TLT, it would be a shakeout, something where you see a dip below a support level that's widely followed, and then a quick rebound to leave that breakdown unconfirmed. That, I think, is still a pretty high possibility. Volatility is obviously elevated in here. We can even see that in the VIX, or the volatility index. So I want to give it a chance to see if this breakout in yields confirms, and then we can kind of focus on year-end targets and objectives. But the next resistance, and we've been pretty public about this, is about 5.25. So it's not to say that that happens anytime soon or even next year, but it's simply the next level of resistance on the chart of yields.
Yeah, certainly a level to watch there. I am curious, though, Katie, because we've seen stocks lower as yields have gone higher. Is there a point at which, especially if you start to see economic growth slowing and the market more concerned about how all of that is unfolding, that you start to see pressure on long-dated treasury yields, and that you could see the correlation between stocks inverse? And what I mean by that is you see yields coming off and stocks coming off.
I mean, listen, anything is possible. We can't really rely on the historical correlations except over the long term. Over the short term, unfortunately, they do break up at times, and that leaves some of us saying, okay, well, what next? So we really just focus on our momentum gauges from the short and intermediate term perspectives. And we have certainly seen yields trade sort of both along the same lines as equities measured by the S&P 500 and inverse, just even in the last few months. So I don't think we can rely on those correlations. And the message there is, yes, anything could happen. For the S&P 500, where we would feel a lot better about it is when we see the indicators shift to the upside, which hasn't happened yet, and or we see a breakout above resistance, which is around 4,600. There is some support very close by for the S&P 500. It's around 43.25. It's being tested as we speak. And secondarily, it's just shy of 4,200. So ideally, we'd like to see that 4,200 area hold by the S&P 500 as this corrective wave runs its course.